The fact that we've worked our way from individuals to high net worth individuals to private companies up to, the tech innovators, and now we're working on the mega public corps and the banks, right? That's a sign of the asset improving. So with exponential processes, there's a whole lot of nothing apparently going on as the process builds and builds. And all of a sudden, there's a little blip. And then all of a sudden, you have more action, right? Like with Apple stock, right? It took forever, 40 years to make it to $1 trillion, and it took like 18 months to make it to $2 trillion. It's like, but you see that as a phenomenon, and that's the phenomena here organically.
MicroStrategy founder and executive chairman Michael Saylor says we are now in Bitcoin's organically viral era, which he says will be marked by explosive growth for the leading cryptocurrency. According to Saylor, Bitcoin has grown organically, albeit quicker than any other asset, from being magic internet money to a gigantic trillion-dollar asset that's being embraced by megacorporations and multinational banking corporations worldwide. U.S. banks like J.P. Morgan, Goldman Sachs, BNY, and others, once sworn enemies of the entire cryptocurrency space, are now lobbying to custody Bitcoin and Ethereum for their wealthy clients. According to reports, BNY Mellon, one of the world's largest custodian banks, is looking to offer custody services for Bitcoin and Ethereum to clients. The bank is also seeking more regulatory approvals to capitalize on the lucrative crypto custody market. Last month, during an interview with Bloomberg, a representative told the news outlet that BNY has engaged and will continue to engage its banking regulators to offer custody services to crypto ETP clients at scale. According to Michael Saylor, who has a bullish $13 million prediction for Bitcoin by 2045, this is only a small peak of what's coming for Bitcoin and the overall cryptocurrency space in the coming years. Saylor is certain that the regulatory stumbling blocks are being pulled down one after the other, opening up access to not just wealthy institutional investors, but also multi-trillion-dollar megacorporations like Apple and Microsoft to invest in the future of finance. This is a paradigm-shifting moment for Bitcoin and the entire global financial industry, Saylor declares in a recent interview with Onramp Media, one that will completely revolutionize the world of finance and how the world invests. We will now bring you clips from Saylor's interview as he discusses Bitcoin's new explosive growth era. But before we do, please take a little time to like this video, subscribe to the channel, and turn on post notifications for more videos like this. We would also love you to join the conversation by dropping your comments and observations in the comments section below. Everything helps with the YouTube algorithm and contributes to the channel's growth. Thanks, and enjoy the video.
I think the three big planks of corporate adoption of Bitcoin are, number one, fair accounting. And we started with indefinite intangible accounting, and we get fair value accounting in January of 2025 that's mandatory. So there's been about a 4-year period of normalizing the accounting. I think the accounting is hostile and prejudicial to a well-run company. Just because if you can only lose money and you can never make money on an investment, a reasonable CEO or CFO would say, I don't know if I want to make that investment. And so even though the reality is you would make money on an accounting basis, it would look like you're losing money. So I think that was the first challenge. The second challenge is fair treatment as an institutional asset, via the Securities and Exchange Commission or the major financial regulators. And we started to get that January of 2024 with the approval of the spot Bitcoin ETFs. And before that point, a lot of skeptics were of the opinion that maybe it would be banned, or they're not sure it's an actual real asset. You have all the skeptics saying it's tulip bulbs or it's a Ponzi scheme or something. But of course, the SEC would never approve an ETF for a Ponzi scheme. So probably for people that don't really think hard one way or the other about this, they're reflexive investors. They're looking for that endorsement from the most important financial regulator in the world, or regulators in the world. So that was plank 2. And I think plank 3 is fair treatment from the banking system. So right now, it's impossible for most major banks to custody Bitcoin, buy Bitcoin, or sell Bitcoin for you. There are a few banks in Switzerland. I mean, there's Standard Chartered Bank in Europe. There are some of the banks in Brazil that can handle the asset. But the major corporations, right, the Microsoft, the Google, the Amazon, the Apples of the world, they wire billions of dollars a month to a too big to fail bank, right? A bank with $1 trillion balance sheet. And right now they wire the billions of dollars a month to buy sovereign debt. They're just saying, okay, take this $1 billion today and buy T-bills with it. And it's like a 10-second transaction. It's routine. They've been doing with the business with the same bank for 30 years, 40 years. Citi is National City Bank. National City Bank was the bank of John D. Rockefeller, run by his brother. Okay, that tells you how far back. J.P. Morgan, right? Try to remember who founded J.P. Morgan, right? And how far back it goes. J.P. Morgan wasn't the first, right? He took it over. So what you have are these 100-year-old banks and 100-year-old relationships. And at the point that a CFO can send $1 billion of cash to their bank, buy $1 billion of Bitcoin, do it and hold it there, no risk, right? Or what they perceive as no risk, right? These are too big to fail banks. So the shareholders of Apple and the shareholders of Microsoft, they're not obsessing over the risk that Apple and Microsoft take to do business with Bank of America or JP Morgan or Citi, right? Or Wells Fargo. So that's a very important thing. When you've got all three, when you've got fair accounting, when you've got fair, securities treatment or trading treatment, and when you've got fair banking treatment, then you'll see mega corporations that will think, okay, well, this is a reasonable thing to do and it's practical to do. Until you've overcome those three, then you've got problems to solve.
During his interview, Saylor also talks about the Bitcoin 24 model, an open source macro model forecasting asset growth and Bitcoin adoption over the next 21 years, along with micro models to evaluate various Bitcoin strategies for individuals, corporations, institutions, and nation states. The model forecasts how Bitcoin will perform over the next 21 years, giving a bear, base, and bull case. This is similar to Saylor's $13 million base case prediction for the leading digital asset. While speaking at a conference in Nashville earlier this year, Saylor gave his macro Bitcoin forecast for 2045, giving a bear case, a base case, and a bull case for the leading cryptocurrency. In 21 years, Saylor expects Bitcoin's price to appreciate at least 4,300% from its current price of $68,000 to $3 million per coin. That's the bear case. Saylor's base case for Bitcoin is that it hits $13 million by 2045, a 19,000% price explosion from current prices. This will put Bitcoin's market cap at $280 trillion, a 280x increase from the current $1.3 trillion market cap. He reiterates this prediction during his interview with Onramp Media, adding that no other asset class or business idea will be able to match Bitcoin's expected rate of return in the coming years. Here are more clips from the interview.
What I think is Bitcoin is the risk-free return for a Bitcoin maximalist. So just start there, right? Bitcoin is the risk-free return. And the question is, do you want to take risk or not? Right? So, and I ask this question, like in my personal life, like we've created the Bitcoin 24 model. The Bitcoin 24 model is based on a lot of your work, Jesse. You'll find we started with your work and then we created it. We put it in the public domain. And the Bitcoin 24 model You can go Google it and find it on GitHub. I think 20,000 people have grabbed it, since I tweeted it. And in it, you've got all of the assumptions about the macro environment. You can crank in your own inflation assumptions, your own innovation assumptions, your own monetization and demonetization assumptions about gold and art and real estate and bonds and currency. And then you can put in all your own Bitcoin growth assumptions and create a bull case and a base case and a bear case. And then after that, there are micro models. And so you can model your family and decide, do you want to move to UAE or not? And how much money can you generate and when? And how much assets do you start with? And you're going to, inherit money from your rich aunt and, what? And then you could decide, if you can mortgage your house or not mortgage your house. And so you've got a micro model. And it's also got a corporate model. And, if you're a corporation, you can crank in your corporate model. You can also build your own. I mean, it's an open spreadsheet. Just grab the thing, duplicate it, and be off to the races. And you can create a institutional model. Look, the answer is different if you're running Harvard's endowment than if you're running, the Myers Family Trust, than if you're an individual, than if you're a Bitcoin miner, or if you're an operating company, or if you're a bakery, or if you're Tahini Brothers, right? I mean, everybody's got their own thing. So that model is very open. But what I've done is I cranked in my assumptions and I have presented my base case and in Nashville. And my base case is Bitcoin goes to 13 million a coin, and it's the ARR of 29% ARR over 21 years. It's like you don't have to accept my assumptions. Make your own. Just go down. If you can use a spreadsheet and type in numbers and hit save, you can do your own model for the next, and you can do it in 10 minutes and you'll generate lots of beautiful graphs and you'll decide whatever you'll decide. But if we start with my base case is the risk-free return is 29% ARR for 21 years, which means that when you pitch me an idea, if you come to me and say, hey, I got a new Bitcoin custody thing, or I got a new hardware wallet, or I got, a new Bitcoin whatever banking thing, or I got a new whatever. I'm like, well, so can you guarantee me 29% plus the risk premium, which is probably 8%, 6, 8, 10%. It's like the risk premium on a mega corporation like Disney or whatever is 4 or 5%. And the risk premium on a small startup has got to be 20%. Okay. And so if you pitched me an idea and said, okay, I guarantee you 40% ARR for the next 21 years. And I'm like, and is it going to be capital free? Like I don't have to bother with it and I don't have to put any more money in later. You're like, well, if you promise me all that stuff, I'm like, okay, well, let me think about it. But probably if you gave me 10 of those ideas, I probably still don't want them because it's just a distraction. Because my view is 29% ARR risk-free.
Meanwhile, Saylor has been catching a bit of flack for his comments about paranoid crypto anarchists in reference to cryptocurrency investors who don't trust centralized institutions like BlackRock to custody Bitcoin without bastardizing the asset's core fundamentals. In a recent interview with Madison Reedy, Saylor took a jab at the original Bitcoin community, most of whom are expressing concerns about the influx of entities like MicroStrategy and BlackRock into the cryptocurrency space. The interview asked Saylor about the risk of holding large amounts of Bitcoin on centralized platforms, especially given the risk of government seizure. Saylor responded by saying, I think that when Bitcoin is held by a bunch of crypto anarchists who aren't regulated entities, who don't acknowledge government, or don't acknowledge taxes, or don't acknowledge reporting requirements, that increases the risk of seizure. On the other hand, Saylor believes that with institutions like BlackRock, Fidelity, and JP Morgan, the risk of seizure is lower, given that lawmakers and politicians are also invested in these platforms. Several members of the Twitter crypto community have criticized Saylor for his remarks. Bitcoin OG Max Kaiser called Saylor the type of guy who thinks the stripper really likes him. Adam Semeka, a Bitcoiner and the founder of Mana Bitcoin and Hands-Free BTC, pointed out that Saylor has changed his tune on these issues and used to speak far more intelligently about Bitcoin. Mandrick, another popular Bitcoin OG, called Saylor an absolute knobhead, and many others criticized Saylor's faulty understanding of what Bitcoin truly stands for, a complete separation of money and state. Do you agree with Michael Saylor's remarks on self-custody and paranoid crypto-anarchists? Or do you agree with those criticizing these remarks? Please share your thoughts in the comments section below. Also, ensure you like this video, subscribe to the channel, and turn on post notifications for more videos like this. Thanks for watching.